Do you really need to buy a house in this economy? Look at me in my eyes. Get real close. $10,000. Delusion. Very, very bad. Very, 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 very bad. Oh, there's almonds in this. Would I do it again? It depends on the day. Hello and welcome back to my channel. It is a glorious Monday afternoon. We're supposed to be getting a foot of snow this week, so that's really exciting for me. But today we're going to be talking about the home buying process because I did buy my home when I was 23 years old back in 2021. And with that comes a lot of questions and a lot of things that people don't normally talk about with the home buying process that I feel like it's necessary to talk about. Ugh. I would say the first thing is you need to figure out why you want to buy a house. Do you have an actual reason? Are you just looking around? Like what's going on? Do you really need to buy a house in this economy? Because interest rates are actually fucking insane. With that being said, you're probably thinking, Erica, well, isn't your interest rate insane? No, it's not. My interest rate is a 2.85. Excuse the fuck out of me! I know. And my credit was very mediocre when I bought a house. Another myth that everybody says, you need a 750 credit score in order to buy a house. No, you don't. I had a 620 when I bought my house and my interest rate was a 2.85. Okay, let that sink in. Alright, so once you figure out kind of why you want to buy a house, you need to figure out what you want in your house. Okay, you obviously have your dream house, but you need realistic expectations, which I did not have going into this process. I was like, I want a 3,000 square foot home with really big ceilings and this and that and all new appliances and marble countertops for $250,000. Delusion. Figure out what your absolute must-haves are. Like, do you absolutely need 2 full bathrooms? Square footage? Do you need a fenced-in yard? Figure out what your absolute needs are, not your wants, because that's going to make a big difference when you're going through this process. Another thing is, remember, you can make any house look a certain way, but you cannot pick up and move a house. Okay, I learned that the hard way. So make sure the area you're in is a good area. Make sure it's like an area in progression so that the real estate property values go up. Take it from me. Oh, there's almonds in this. I don't like almonds. Oh, excuse me. When you get pre-approved for a loan, again, you don't need great credit. My credit score was around a 620. I don't remember exactly what it was. It might have been like closer to 650. It wasn't considered good or great or anything. It was considered fair. Like, it was just above the bare minimum you need to buy a house. So with that, there's different loan types you can get. I went with an FHA loan, which is really good for first-time home buyers, as well as people with lower credit scores, because this doesn't require you to put 20% down. Another myth that the boomers love to tell everybody. You need 20% down. You need $80,000 to buy a house. Wrong. Okay, you do not. I put 3.5% down on my house. So my house was $264,000. I don't know, I don't remember what 3.5% is. I think it's around 10 grand. That's much better than 20% of almost 300 grand. So make sure you're finding the right loan type and make sure you're finding a real estate agent that's advocating for you and your financial situation. Okay, you don't want somebody that's like, oh, well, you have to do this, so you have to. No, fire them, get them out.
Oh, and by the way, you're fired.
Absolutely not. But being pre-approved and pre-qualified and all that goes further than just your credit score. Like, it comes down to debt to income ratio, your payment history, all that good stuff. Everything that like your credit actually picks up is what the lenders are looking at as well. So you could have like very mediocre credit, but your payment history could be really good. You know, your debt to income ratio could be decent. Another thing that they do not take into account when it comes to debt to income ratio is student loans. So if you're worried that your approval chances are low because you have a lot of debt with student loans, they don't count those against you. Just saying. So now you're pre-approved, you have your loan, you have your loan officer, you have your real estate agent, you're good to go. You know your budget. So when you start shopping around for houses, again, you want to make sure that you're looking at your absolute must-haves. You know, if they have some extra things here or there, your non-negotiables, whatever it might be. Make sure, you know, don't settle, okay? You're not going to settle for like a $400,000 investment. If you're not happy, keep looking, because there's going to be a house at some point on the market that you're going to really like. With that being said, when you are shopping around, let's say your absolute cap for your loan is 300 grand, look at houses maybe in like the 250 to 275 range, so then you have more leeway to offer more, because as of now, everybody knows that the housing market is extremely competitive. When I was buying my house, I got beat out on 3 houses, obviously 3 different people, going in $30,000 to $50,000 over asking, and all cash offers. Yeah, I was like, oh, So make sure you have some wiggle room that you can go over if needed. You can also do something called an escalator. I believe that's what it's called, like an escalator, an escalation clause in your paperwork. So when you put your offer in, let's say the house is like 260, the max you can offer is 300 because that's what your loan is. Then you could say, you know, I'm gonna offer 275, that's 15,000 over asking, but I'll go up to 290. So if there's other offers that come in above you, then you will still beat them out until somebody beats you out because it's an escalation. But then like once that escalation is hit at that 290, your offer is not gonna go over that number. Okay, another thing that I really am gonna harp on with this is never, ever, ever pass up getting an inspection to get a house. Okay, especially in today's market when it's really competitive, a lot of people will waive the inspection because then the buyers are like, oh, that's so easy, we don't have to worry about like something not passing because it's not getting inspected. Look at me in my eyes, get real close. Do not waive inspection, okay? Never ever do that. You will get screwed. We didn't waive inspection and we still got screwed. You wanna know why? Apparently there was this plumbing that came out in like the 70s or the 80s called Quest Piping. It is polybutane or something like that. This really flexible, like, it's really flexible. Like if you bend it enough, it'll snap in half. They put that in houses for all of the plumbing everywhere. And then about 10 years later, they were like, oh, you know, this plumbing is actually kind of shitty and it's breaking and it's leaking and all these houses are being destroyed, so we're gonna outlaw it. Well, just because you outlaw it doesn't mean that the state's gonna come in and rip it out of your house and replace it for you for free. So a lot of these houses built in the 80s still have this Quest piping, and even though it might pass inspection because it looks fine, if your homeowner's insurance finds out you have this Quest piping, they will drop you, or they might not cover you. In my instance, I didn't know what Quest piping was. The inspector did not say, hey, you know, this is kind of problematic. Maybe you should talk to the sellers about this, or maybe don't buy this house. You know, that's what a decent, ethical human being, I think, would do, in my opinion. However, we didn't know we had this plumbing until we had a leak that caused us to call our homeowner's insurance. They came out, they inspected everything, they reported obviously that we had this Quest piping, so our homeowner's insurance is like, okay, great, like, don't worry, we're gonna cover this. We're gonna cover this. You only have to pay your deductible of $2,000. I'm thinking, okay, great, because this is gonna cost us like 12 grand if they weren't gonna cover it. And then they were like, oh, but by the way, the type of plumbing you have is actually outlawed and we don't cover this. So if you don't replumb your whole house in 30 days, we're gonna drop you. And if you ever get dropped from homeowner's insurance, nobody will ever pick you up because that's very, very bad. Very, 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 very bad. You wanna guess how much it costs to replumb our whole house in 1 month? $10,000. Don't we love that? So if you're looking for a house and you're touring and it has Quest piping, do not buy that house, okay? Just don't. Maybe you should just say, you know what? I think I'm good. Another thing I want to bring up is that if you're young or if you're even in your late 20s looking for a house, really, really think about it. Do you really want a house? Do you really see yourself living here for the next 5 to 10 years? Honestly, do you really need a house? Are you just doing it because everybody else is doing it? It's a lot of work. You know, everybody's like, oh, it's a great investment for down the road, blah, blah, and yeah, sure it is. But you're gonna need to put in a lot of equity to make it worth your time. Yeah, like, it's gonna become your whole life. Or you need to find a really good up and coming area, so by the time you're leaving, that area has up and come, you can get a good ROI. So just really think long and hard if you really wanna buy a house. Okay, alright, so let's say you put your offer in and they said, congratulations, you were chosen out of all these applicants. We want you to buy our house. Yay, woohoo! Okay, now comes the real headache. You thought, Erica, what do you mean? I thought the real headache was like getting chosen. No, now it gets real invasive. They're gonna want all your information, like they're gonna want to become you essentially, because they're gonna know everything about you. They want your W-2s. If you're a 1099 or whatever, they need those. Tax returns, bank statements. They're gonna question you about these bank statements. If there's like a discrepancy, you cannot use your credit cards. Okay, once you're chosen and you're in the closing process, you cannot use your credit cards. Okay, throw them away, shred them, I don't care. You cannot use them. Don't use your credit cards. You cannot accept money from anybody, and if you accept a substantial amount of of money from somebody, they're gonna have to write a letter stating that they're gifting it to you. I don't remember the whole process as to like what, like they have to explain what it is and why they're sending it to you. And if somebody's helping you with your down payment, like your parents or a family member, they're also gonna have to write that letter. Closing's done and the house is yours. That third party person can't come and say, hey, actually you have to pay me back, or like I want that money back from the loan company and all of that. That's another thing you're gonna have to do. So essentially, closing doesn't mean that the house is yours, okay? It just means that it may become yours. The lender is basically doing like a background check on you to make sure you're financially responsible and financially stable enough to buy this home, which is why they're doing a deep dive on like everything possible about you. They might even call your employer. Okay, so just prepare yourselves. And then while all this is going on, then you're gonna have your home appraisal and inspection happen. And you wanna make sure that the appraisal comes back at equal or more value than you bought the house for, because otherwise you just lost money, girlfriend. The appraiser comes in, you bought that house for $275 and they're like, it's only worth $260. Pack your bags up and roll the fuck out. Because the bank is not gonna pay what it's not worth. So if the appraisal comes back at $260 but you're paying $275, your loan is only for $260. You're paying that extra 15 grand out of pocket.
Ah, what the fuck?
And if the sellers don't agree to negotiate, walk the fuck away. Say best case scenario happens, everything comes back great, everything passed inspection, there's no Quest piping, loan was approved, the house is worth what it's supposed to be worth, great! We're at closing day. Now closing day is really not that stressful, but it is a lot of paperwork. You're literally signing your soul. You're signing your soul away. So just be prepared for a lot of paperwork. You're gonna meet at your title company, your lawyer's office, wherever it's gonna be. That's where you actually sign the mortgage, and that's also where you give your down deposit. When I did it, I'm pretty sure this is standard. I don't know if it's changed, but it has to be a cashier's check for your deposit. And what that means is that when you go to the bank, you tell them however much you need for this cashier's check, and when you get that check, it's not just like a normal like little check. It's like cash. You get that cashier's check, that money's already gone out of your account. It's not like you're giving the lender or the title company this check and then they put it in and then the money's taken out. You get that paper check, you're holding cash in your hand. So make sure you do not lose it or damage it, because if you do, that money's gone and you're screwed. But then after all of that, the house is yours, and it's very exciting because then you walk through the door and you're like, oh my god, this house is actually mine. It's like very emotional, and it was very exciting. It's a huge milestone in your life. So if you are seriously thinking about buying a house, like that, it's a huge thing. Do not let anybody tell you differently. Like, this is one of the biggest purchases, or is the biggest purchase you will ever make in your entire life. If you're gonna take anything away from this video, just know you don't need perfect or even great credit to buy a house, okay? There's tons of loans out there that could approve you at a 620, 630, 640, whatever your credit might be. The process is a lot of paperwork, and they're gonna ask for everything, okay? So just be prepared for that. There are also a lot of hidden costs. One thing I didn't touch on was closing costs. If you can, in the negotiation period, when you and the buyer are going back and forth, try to get them to pay closing costs. That's what I did, so then it's less money for you out of pocket. My house was like $260,000, and because of just this specific situation with this specific house, there were no offers on it, so I actually went under asking because it was the only offer they had gotten. So I went in at like $255,000, so they came back at like $263,000, and I talked to my real estate agent and she was like, well, why don't we go in higher than what they were vetted, but ask them to also pay closing costs, because closing costs can range from anywhere from like $5,000 or more. So I went in at like whatever, 267 or something like that, and then they ended up paying closing costs. So just see if you can negotiate, because closing costs are a lot of money. Owning a home does feel a little bit different than you expect. It is very exciting. You're like, oh my gosh, this is mine, but it is a lot of responsibility. So just make sure you understand that and that you're up for that and that you're financially responsible enough. Not me preaching about financial responsibility when I cannot keep money in my account. Just make sure that you'll be able to repair anything, like a roof, which is like 30 grand, or an HVAC system, which is like 10 grand. And then the big one is, would I do it again? It depends on the day. Some days I say yes, some days I say absolutely the fuck not. Most of the time though, I would say I would do it again, because it is very rewarding, and in the long run this is a great investment, especially with all of the work we've put into this. If you follow me on Instagram or TikTok, you know we've renovated this house from top to bottom. We came in the first day and started ripping shit out. All of the floors were replaced, we've replaced every single door, redid the whole kitchen. Everything in this house is new. So we know we're gonna get a big ROI on this return, which is very exciting. It's just like, I don't know when we'll ever see that money. I will say the right house will come at the right time. You just gotta stay positive and don't settle is my big thing, is don't settle for a house. Don't settle for a $400,000 investment. But if you don't follow me on Instagram or TikTok and you want to see my little renovation videos, then go follow me. I'm also starting a podcast in the next couple weeks, and I'm going to be talking about home buying process, some renovations, just overall life in general. So make sure you stay tuned for that as well. Thanks for spending a little bit of your day with me. Love you, bye.